Welcome. In this video, we're going to be using only the MACD to determine whether an instrument that has been moving lower after making some swing trade highs has the odds of turning around and going back to test the previous highs and potentially improve on those highs. And the same method can be used for an instrument that has been moving higher and has the odds of coming back to test the prior lows and potentially even move beyond those lows. And do stay throughout the video. I'm going to have various other tips. The method works for all time frames and for all trading instruments. Here what happens, and the method is very simple. If we take a look at the MACD, we can see that there's a zero line and we're taking advantage of that zero line. So whenever we come to the MACD and observe any type of uniform activity or symmetrical support above or around the zero line, what it is telling us is that there's a good likelihood of a move higher after a pullback, going to test prior highs and even improve on those prior highs. Now, if we are coming from the low swing trade lows, we come up to the zero line. In this case, we have a double top formation. In other words, we have two instances of moving above the zero line and back below it. In this example, a nice symmetrical action. What this is telling us is that now after this formation, there is a good likelihood that we're going to be coming back to test the prior swing trade lows and potentially even go beyond those levels. Again, method is simple, and let's take a look at some real life examples. In these examples, I'm going to be using this MACD setting as discussed in a previous video on MACD settings, which I'm going to link in the description of this very video. Here we have swing trade highs. We pull back and now take a look at your MACD formation. We've come to the MACD zero line and we touched it, and now we are coiling high right here. So this is symmetrical action by the MACD. And remember, for this method to work, you can use either the signal line or the main MACD line for the symmetrical action observation. By the way, I need to point out that the best signals are generally going to be observed when you see symmetrical action on the signal line, which in this example is the orange line. So right there, it is telling you that there are chances that this is going to go sideways to higher in time to test the prior highs. 1 bar later, take a look at what it looks like. Now we have an impending crossover, definitely signaling that we are already looking to test these highs and potentially build above this based on support around the MACD zero line. And let's see what happened afterwards. We definitely went higher after this uniform activity support. Even the orange line had uniform activity. As you can see, if I draw the zero line as such, you can see that it never came to the zero line but above it with uniform action right here. So that was the key, that there were chances of testing the prior highs, and in this case, not only did we test, we moved above that level. Now here's a pro tip. If I take this area here of the MACD and extend it, and I take this area of the MACD and extend it, every time you clear what was resistance on the MACD, it means that prices are gonna have even higher pressure to continue with the trend. And in this case, since we are moving above the prior resistance areas of the MACD, what that was telling us to anticipate further movement in prices to the upside. And even here, this little clearance right here, that clearance was good indication that there was a likelihood of a continued push in prices to the upside. Here's another example. We got swing trade highs here. We get a pullback. Prices are already coiling higher. Take note of your MACD, especially the orange line, which is a signal line, and we can see that it has gone below the zero line and back above it with what looks like to be very uniform formation. Again, take note of the orange line. If we take this to be the zero line, we can say that it has gone below the zero line and back above it in very symmetrical fashion. So by the time it comes back above the zero line, that is indication right there that chances are very high for retesting the highs and potentially even going beyond the prior highs. So let's see what happened next. Of course, after this re-entry with uniform action, we see that prices had a bias to the upside. In fact, went above the prior swing trade highs, clearing those prior swing trade highs. How about another example? So let's watch this playing out. As we can see here, prices went lower, lower. So right now, we don't know what's going to happen, but just watch the orange line here as a guide. And at some point, I'm going to pause this. Watch your orange line, watch your orange line, watch your orange line, and right there we can see that the MACD now is giving us this look where we've gone touch the zero line and now we are coiling higher. At that moment, what that is telling us is that based on this symmetrical action of the MACD or uniformity concept, as I call it, chances are we are going to come back and test these highs if this formation holds. Now, I have to qualify here and say that yes, we are looking for odds of a retest of the prior high. highs. But if the MACD was to drop back below the zero line, then that means that we're not going to test the prior highs. So what I'm going to do here is let's continue and see what happened after that uniform activity support. So now prices are going back. We can see now we are testing the prior highs and we've gone above those prior highs. By the way, as a side observation, here we made a higher high, but notice we've now had two crossovers, this crossover here and now a lower crossover. As you know by now, this is a clear sign of negative divergence, and I would bet from this formation prices were leaning to go down based on this negative divergence. So let's see what happened after that as a side observation, and now we can see that prices definitely, all right, there we go, prices are drifting lower. We are crossing the zero line, and that is the formation right there. And now what happened, now that we have this uniform activity support again at the zero line, already we are seeing prices are coming back to test prior highs, and based on this support, this coiling below zero and back above it, chances are we are going to take out the highs, and potentially at the very least momentum is going to be moving higher. Let's watch this and see what happens. All right, so we can see there we already touched those prior highs and now going beyond it, which makes sense. By the way, another side observation, another tip, here we've gone higher and then we went higher again, but every time here we have a crossover, another crossover below that crossover, and another crossover below that prior crossovers. So definitely, as prices keep improving, this is a red flag. So let's see what happens after that. There you go. Now we're moving below zero, which means that momentum is to the downside for sure. What would happen if the orange line would move above the zero line with uniform action? Let's just watch it. And if I pause right there, we can see that for sure now we have the orange line has gone below zero. It's not the best looking, but it is close to being as symmetrical as one can want it to be. We can draw a line smack here in the middle of the orange line movement, and we can see that this is almost equal in time and space to this area here. So that to me is close to symmetrical action, and that would suggest at that point that potentially the swing trade opportunity was to go back to test prior highs, if not improve on those highs. Let's see what happened in this case. Okay, so we can see prices, all right, down. And there we can see a good example of when it does not work. One of the key takeaways here is we never cleared this high of the MACD here. We were rejected and coiled down. In fact, we can see now we formed the exact opposite, which is we've gone above the zero line and back below it. Now, I wouldn't say that is uniform action, but at least we can see a good example where we thought that this was going to move prices back to prior highs. Did not happen. And this is the reason why, irrespective of the strategy, there's always going to be periods when it won't work, and we need to understand that we need to have some type of money management strategy to avoid being part of big losses. Here's another example. We have a crossover above zero, and it is with uniform action support around that zero area. The blue line of the MACD touched the zero line with uniform action, and the orange line, the signal line, has coiled with uniform action above the zero line. Then this happens, and we can go find another example. Actually, after that, right there, take a look at your MACD. It's forming. Take a look at the orange line. It's about to go back above zero. This is uniform action below zero, back above it, telling us there are high odds of testing these higher highs, if not improving on those highs, based on this uniform activity support around the zero line of the MACD. And then we would go on this run up right there in prices, as this told us to anticipate this. And because we cleared all these nodes of MACD short-term resistance, that was telling you again that you're going to take out the prior highs and have a strong push to the upside. This information would be very useful in swing trading. The method also works in reverse. You can see here swing trade lows, and you did move in price, but now take a look at your MACDs, especially the orange line. It is hugging that zero line with uniform action, which means that if that's the case and it starts coiling back below the zero line, we might actually be going back to test these lows right here, and maybe even break those lows and go lower. That information right there is invaluable in terms of swing trade expectations. Let's see what happened after that. Again, uniform action, rejection, suggested lower prices, testing prior lows, and we went and broke those prior lows. Now let's take a look at this example here. We got the MACDs seemingly wanting to cross over with uniform action back above that zero line. based on symmetrical MACD support, chances are we want to go and test from here, test these highs. Now, let's take a look at what happens so we can see what we can learn from this example. All right, let's play this. Now notice what's going on here. Looks like a crossover, but now look at the MACD. It's going down. MACD is going down, down, down. Take a look at how it's forming. Take a look at how it's forming. Okay, right there, I'm going to pause it right there. The reason why I'm choosing to pause it here is experience will show you that this is one touching of the zero line below zero back above it. And now we are doing another one here, which means at this rate, if we can continue with the MACD above it, now we are going to go back to test the prior highs and potentially improve on it if this MACD can now stay both above the zero line. So let's play this out and see what happened and see whether prices went back to test those prior highs. And there you have it, already testing prior highs based on this uniform activity support of the MACD right there. I should take a moment here to enforce the idea that the closer the MACD symmetrical action to the zero line, the better. For example, here we have a situation where we have uniform action above the zero line and back below it. The problem is this is way far from the zero line. So it's not the most reliable, but even in this example, it is telling us that we are more than likely going to be testing these lows. And we can see that uniform action right there led to the testing of the lows, as you can see. Now, let's go forward a little bit. Now we have the same exact example, this time with a bullish suggestion. This is uniform action. And again, the closer to the zero line, the better. This is very far away from the zero line, even though this is symmetrical action below zero and back above it, which led to the following price action. And you can see that from a closing basis, we came close enough to test the prior highs. As I said, it's a method to determine where there's going to be a potential for a retest of recent lows and recent highs. This might not be the best example of uniform action, but it is close enough, especially the orange line. It has gone above the zero line and back below it. Remember, we want this to be as close to the zero line as possible. But even in this case, what this is suggesting with this uniform action, with the orange line having gone above zero and back below it, almost with uniform action, chances are very high we are going to be going back to test these lows right here. So let's take a look at what happened after that. And we can see with time, we actually did go and break those lows. Another example, we can see here, we touched the zero line and now we seem to be pointing down, suggesting yet again that the possibility of testing these recent lows is now back on the table. So let's just go and see what happened afterwards. So right there, we can already see that we tested the lows right here. So a retest did take place. And now we have a situation where we have this movement below zero and back above it. Here it was at zero. It's gone below zero, the orange line, and back above it with uniform action, which is suggestive that we're going to be going back at the very least to test these highs, if not go beyond them, or even these highs right here. And if we go forward a little bit, we can see that once we went above the zero line, the momentum was strong enough for this great swing trade to the upside. Here's another example where we go below zero, back above it. Not the best perfect uniform activity, but it is uniform activity of the orange line below zero and back above it. Before this happened, prices went higher, of course, taking out prior highs and improving on those prior highs. Now that you've seen symmetrical action, what would this be telling you? We have uniform activity support of the MACD line, and even the orange line, the signal line, is showing uniform activity above the zero line. It would be suggesting that chances are prices are going to be going back to test prior highs, if not go beyond them. And of course, we can see, because we cleared the short-term MACD area right here, the chances are we were going to go beyond the prior highs and improve on those highs, as we see in this case. I will stop right there so as not to make the video too lengthy. More research on your part is needed so that you can reinforce this concept, this method, and see how you can use it and improve on it. I am Eric with Mother.com, and I leave you as I found you, in the love light of the one infinite Creator. Go forth rejoicing in the power and in the peace of the one Creator, Adonai.